I'm here with
Kevin Hoang.
How old are you and what do you do for a living?
I'm turning 35 this year, and I do a variety of different things. I'm a mortgage broker as well as a real estate investor and developer, both in the United States and Canada.
So what were you taught about money growing up?
My biggest money lesson for my family was to save money. Don't spend it recklessly on things we don't need, but also you have to still treat yourself time to time and spend money on education because where we come from, my family background, I'm the first university educated post-secondary in my family.
Yeah.
Education is very highly valued in our culture, and it is supposed to be the door that opens for opportunities and to uplift out of poverty, right? So when my parents first came to Canada, they were the first generation immigrants here. They worked a lot of different jobs and they worked really hard, but they didn't go to school. Given the opportunity, they definitely wanted their kids to go to school.
Yeah.
So any opportunity that my parents could buy books for us, enroll us in any extra classes to have us improve our education, they were never opposed to that. Those were my biggest money lessons from my family.
Yeah.
Don't save, but also do never cheap out on the education side.
Got it. So what were you taught about credit cards and debt growing up?
So nothing, actually. My parents taught us to save money and to try and make money through our careers and things like that. We never talked about the credit side.
Yeah, same. Yeah.
Which I think is very common for not just immigrant families, but like everyone.
Yeah.
Right? When they talked about, hey, one day when you buy a house, it was probably just inferred or like understood that you're probably going to get a mortgage. That's like the extent of any talks about getting debt.
Yeah.
But you got to pay down your credit cards. You never paid the minimum down. Pay the entire balance.
How old were you when you learned what a credit score was?
I want to say when I got my first credit card.
Yeah.
But probably a little bit like right before that, because I realized and I figured out and I learned this from somewhere else that you need a credit score that is high to be able to get a mortgage one day, be able to afford to finance a car and that kind of thing.
Yeah.
So in order to do that, as soon as I turned 18, I'll never forget this. I was banking at the time with the same bank that I was banking with since I was a little kid.
Yeah.
And it was that time, birthday, 18, you sign up through the credit card application.
Yeah.
I didn't know that I needed to keep it at a certain balance, like the utilization rate.
Yeah.
But I knew that we needed to pay it on time.
So
those are things I knew and understood, but to any further extent, like I had no idea until much later on.
So I just kind of want to let the audience know before we go back to the money questions, what you do for a living and stuff. So what got you into the mortgage industry as an agent, and what were you doing before?
So it's a good question. I started investing in real estate in 2022.
Yeah.
I want to say even before that, because there's a lead up to that, like a lot of research, a lot of things that were going on beforehand.
Yeah.
So having said that, that's how it all started. So I first was a real estate investor. I bought some rental properties, and then I noticed that I wanted to learn a lot more about the financing side.
Yeah.
And as I started sort of becoming more focused on investing, a lot of friends and family and people in my network in general, they wanted to kind of also like learn as well. And I thought that the best way for me to give back as well as provide value was to tap into my existing background, which is in finance, accounting based related.
Yeah.
It was a close like bridge, right? Because like what I did before was I worked a lot in credit analysis and adjudication.
Yeah.
So in doing so, I had an idea of what constitutes as good credit or bad credit, or how we can get credit available to B2B customers.
Yeah.
So having that background already, I knew this was kind of like similar in a way.
It's like a bridge.
It's a bridge. Yeah. It wasn't so far off, and the learning curve was not like that steep.
Yeah.
In doing so, making that transition over, I realized that I already understood a lot about like credit, debt, and finances, and the financial analysis as well.
Yeah.
Sometimes whenever I speak to people or friends and family of mine, or even just clients in general, I know that I'll be able to provide them a lot more depth, a lot more detail, a lot more information than otherwise if I was to do something else. I think that just my background was much suitable for this.
Yeah.
And also, I really want to give back because I know that it's not a one size fits all a solution. You're in the insurance as well. Like we need to focus on the client and we need to focus on what's best for them. Right? And going through all those hurdles as an investor, transacting on a lot of properties myself, realizing that you've being there, gone through it already, it's a lot easier to advise and give people like advisory
Yeah.
based off of your own experience.
Exactly.
As well.
Yeah.
You help guide people through. They don't have to go through the same hurdles as you, right? So
Yeah.
that's sort of why I became a mortgage agent.
Yeah.
And what I was doing before was I've worked so many different jobs. I've been a lifeguard, I worked in sales, I've worked in accounting, I've worked in like finance, like so many different types of jobs and roles.
Yeah.
I've worked at restaurants too.
Yeah.
Not crazy long time, but I've had
a crazy resume.
I've had so much a different sort of variety of different experiences.
Yeah.
So
what did you want to do as a kid? Is there something that you wanted to do as a kid?
To be honest with you, when I was really, really young, I wanted to become like an entrepreneur, like a business person.
Yeah.
I always thought it was so cool, but I kind of moved away from that later down the line. Obviously, you know, everyone has a dream to like be like a pro athlete, whatever, or like astronaut, something that's like, I'm not saying outlandish, but you realize that, you know, you go through school and depending on who you meet in life, it kind of turns and steers your path differently. So
based on your life experiences and everything. Right?
Life experiences and people that you meet.
Yeah.
And I realized I wanted afterwards, I wanted to become a teacher. Like I always tell this story. The night before you were supposed to accept where you go to school, I was torn between going to study business undergrad at Laurier or go to Glendon and study French to become a French teacher, like a concurrent French education.
Are you fluent in French?
I'm not anymore, unfortunately.
Okay,
but when I was, because I had formal French education from grade 5 to grade 12 in extended French.
Yeah.
So half day French, half day English. So I was pretty competent, I would say.
Yeah.
But I have a passion for languages, right? So growing up in an extremely bilingual home, trilingual even, like I was speaking so many different languages and then learning English, just being alive in Canada, like day to day going to school and picked up a lot of different languages. My parents put me through the French extended program as well.
Yeah.
So I had I had a deep passion for languages and had a lot of exposure. So I knew that I wanted to do something with languages. Having said that, languages is pretty mobile. You don't have to be in like a field that's specifically about languages. Like you use languages to communicate all the time.
Yeah.
So I realized in my later years, I really appreciate the fact that I've had all of these tools because I can communicate with a greater variety of people as well as understand more of the culture of each community that I do speak the language of. So I've appreciated it a lot more, and thank you, Mom and Dad, for exposing me to so much. But that was something that was really important to us growing up.
What was the most difficult part when you first started as a mortgage agent?
The most difficult part when you get started is there's just so much to do to get you to a stage where you're feeling the business is becoming, I don't want to say like runs itself, but to a point where you can implement systems.
Got it. Yeah.
So when you're new, it's like the first day at school, first day on the job, you just don't know anything. Yeah. So you don't know that much about the products. You don't know a lot about the solutions that could be used for everybody, right? Yeah. I was familiar with what I was used to for myself, but then not knowing exactly how to do everything all at once. And everyone has different fires and different problems and being able to get qualified. So just not having that familiarity right away, that was a really difficult challenge. And I think that you can speak on this, like you know, as the more you do it, the more months and years and things pass, you have a lot of battle scars. So over time, you learn very quickly. You learn on the job.
Muscle memory after.
It becomes muscle memory.
Yeah.
So I think that to answer that question, everyone goes through it. It's just a matter of not giving up.
Yeah.
But at the beginning stage, it's just overwhelming.
Yeah.
It's like you want to do all these things, but maybe it's not the appropriate time to do it.
Yeah.
I think that once you get kind of in a flow and you know how to use your skills better, that's also a challenge because when you're first starting out, you have all this energy and you have all these like different tools that you have. Yeah. But how do we implement this right away in a setting that gives you the best ROI for your time? Right?
Yeah.
That is a challenge.
Yeah.
But you get used to it, you know?
Yeah. Everyone has like their strengths that you can apply, right? It's just you have to figure out what to use when, I guess.
Yeah.
Right? Yeah.
And when you're in it long enough, you know for your time and your effort invested into it, you know from trial and error. Yeah. What's the best use of your time?
Exactly. Yeah.
Right?
Yeah.
When you're first starting out, you have no idea. So
you're not efficient with your time.
Not efficient. You're just trying different things. So I guess time heals all pain. Yeah. Time fixes all problems.
Yeah.
So just being like they say, time in the market,
Yeah.
timing the market,
Yeah.
time in the market, literally
Exactly.
just being there, grinding it out every day.
Yeah, not giving up, right?
Yeah.
Yeah. What are some common questions you get from first-time homebuyer clients?
Yeah, so first-time home buyers, they ask a lot about the down payment situation, putting less than 20% down. That's a common question. So can I put down 5%? Can I put down 10%? And the reality is you can't. You can put down less than 20%. These are insured mortgages, but you need to qualify for them. It's not 100% guaranteed
Yeah.
because it depends on your income. It depends on the price of the property. Obviously, it depends on the credit situation and all that good stuff as well. But we can't assume that we can qualify for less than 20%.
Yeah.
It just depends on your file. It depends on those various factors I had mentioned. But it's a case-by-case basis because we can't say, hey, listen, I have a friend that put down 5%. Well, what was the price of that property, first of all,
Yeah.
right? And it has to be owner-occupied. And also, it depends on your friend's income or that person's income.
Yeah.
So it's definitely a conversation that we have to have, but it's I like to look at the file holistically. But that's a common question. How much can I put down? Because I know prices of homes in the GTA across the country now, they're starting to become a lot more expensive. So affordability is becoming a little bit of an issue. So everyone wants to be able to get into a home, and putting a little bit less
Yeah.
might be
to get in sooner, right?
yeah,
Is
to
that-
get in sooner.
Yeah.
But have their home maybe to start a family. After people get married, it's definitely reasonable and understandable. Why?
Yeah.
Because, like I said, the homes prices are high, so a lot of people cannot afford to put such a huge, massive down payment down.
Yeah.
So it is a common question. Another common question is about the
Yeah.
FHSA,
Yeah.
right? It's
Yeah.
actually new, right?
Yeah.
So it's I think it's a great tool. It wasn't around when I bought my first property.
Yeah. It's
So-
very new. Yeah.
Yeah. So what I would say about that is the people that can take advantage of that, max it out. It's tax free for the returns that you get on those investments, but then you get to deduct it on your tax return.
Yeah.
Just like the RRSP
Yeah.
as well. So that's something that I highly recommend people take advantage of fully.
Yeah.
And another one is the RRSP question, where if you borrow RRSP and you put it towards your down payment, like what are the implications? You have to pay it back, 15
Right,
years, and you have to pay it back. Like it's not something that you can, you could just borrow and forget about.
Yeah.
So that's actually a tool as well to be
Yeah.
able to get you into your first home.
Yeah.
But you just got to keep in mind, you got to pay it back.
Yeah.
FHSA, I think, is such a great tool because
Yeah.
it combines both the RSP element
the TFSA.
and the TFSA.
Yeah.
Right, there's and it's for a specific use.
Yeah.
It's pretty good.
Yeah.
I think that it's. Here's what my beef with it is. It's a little like the limit is low.
Yeah.
I shouldn't say the limit is low.
It depends on if you opened it on the year that it was implemented, you would have, I think what is it, 13,000 I don't know what the number is per year, but it goes.
Yeah.
It's like you should have up to like 40 grand, like 45,000 now, and it's
Yeah.
like obviously in order to grow that, unless you're putting it into a stock or something,
Yeah.
which is super volatile, and
Yeah.
by the time you're buying a house, you could be down 50%. You don't know that, right?
Because
the market could crash.
Yeah, it's a long term.
So you want to put it into something safer, right?
So here's my
That's the thing.
problem with
Yeah.
it. Yes, you could have the 40 grand in it.
Yeah.
But I don't know how easy it is to get a home.
Exactly,
Like with that
yeah.
40 grand.
Yeah.
Everything helps though. We're not.
It helps, yeah, because you're not taxed on whatever you're earning,
Like
right?
we're not gonna try and attack various different issues at once.
Yeah.
But I would say everything helps
Yeah.
for sure.
Yeah.
40 grand is better than zero, right?
Yeah.
So that's great, but it is difficult to imagine having that solve a lot of your problems because housing costs are really high.
Yeah, they're going up more than the contribution room you're getting, right? The housing
Yeah,
cost,
see,
the
that's-
cost of living is going up way higher.
That's the
right?
thing. But you know what though? Like kudos to the government, like
Yeah.
to at least have something.
Yeah, because we have a TFSA, we have a RSP, we have a FHSA. The United States, they don't have all that, but then they also have affordable housing, right? So
Depending on the
Depends
market,
on where
right?
you're at,
And
yeah.
it depends on so many different factors. It's just give and take.
So what are your tips for somebody who hopes to buy a home someday?
Yeah.
And in the cost of living environment we're in right now, where let's say they make 50K gross.
Yeah.
Or they're a couple and they make 100K gross.
Yeah.
What are your tips for them into, like, let's just say 5 years from now they want to buy something?
So these are my thoughts.
Yeah.
Okay. I really believe that saving and investing there's definitely like pros and cons, right? It's not you should definitely save and invest right? To be able to grow your capital, to be able to have more money, to be able to put towards a down payment for a home, or do anything you want with it, like to start a business, whatever you want, right? It's your money, you do what you want with it. But I also think that if your goal is to buy a home, perhaps your starter home just needs to be a lot further away from where you work.
I agree.
And it's a little bit a difficult conversation to have.
Yeah.
Because, well, how do you commute like 2.5 hours, right, to work?
Yeah.
Well, maybe your job doesn't need you to go 5 days a week. Maybe it needs it needs you to go, just a few, like hybrid jobs, like two times a week. Then
it's a short-term sacrifice, right, that you're making.
It's
right?
a sacrifice, right? It's like those people back in the day that lived like in the GTA, talking about previous generations that maybe started off with a little condo, and then they sold that condo, upgraded it to like a townhouse, you know what I mean, the single family, that sort of idea. I'm thinking like a little bit further away where you can actually afford, right? Comfortably. When I say afford, I mean like it's not just what you qualify for per se, but like
the amount of income, how much of your income you're putting in every month, kind of thing, right?
Well, here's the thing, right? Like not just what you can qualify for, but what you feel comfortable to with a little bit of reserve, a little bit of backup. I'll give you guys a really good example. So I have a rental property out in Chatham.
Yeah.
Okay. Chatham is like not super far from.
Is that near London?
It's between London and Windsor.
Okay.
So a lot of my tenants are young people that actually are from GTA, Hamilton region, and Niagara region. I noticed that because these other areas and other communities have properties that are like 300, 400,000, a lot of young families or young couples, they started moving to these areas, and then they have jobs in these areas, so starting a new life in these areas. Their income is going to take them a longer way, because they make, like whatever they make is comparable, but the cost of living is lower. Affordability pushes people further and further away from the big city, which is fine. It's part of life. If you look at other places around the world, I remember watching a video about a lady in China. She commutes like 2.5 hours to go to work. Like it's she has a family. She takes care of her parents and she takes care of her baby, like her husband as well, right? So they both have to commute. What are you supposed to do? Like this is where her job is, like, and this is where her family could afford. So that sort of short-term sacrifice. Maybe if you really want to get into a home and you want to, have a backyard, all that stuff, then it's just going to have to be the conversation of going a little bit further away from the city. Yes, you don't have to be there forever. As you pay down that mortgage,
you build some equity.
As the property appreciates a little bit. You could probably sell that home, have a bigger down payment, put it towards your home closer to the city, whether that's Waterloo, Kitchener, whether that's Cambridge, Guelph. Like as you come closer and closer, you might be able to afford something a little bit closer.
So, in your opinion, do you have to own your home to build wealth?
I don't believe building wealth has a one-size-fits-all approach. I think owning real estate, owning a home, there's a difference between owning a rental property and owning your principal residence, right?
We're talking about principal residence here.
I don't believe that owning your principal residence is necessary for building wealth. It could be used as a tool. It just depends on affordability, right? So if you can afford your payments and you're not struggling every month, it depends how much of your income is dedicated towards that.
How much are you able to save while living there too?
Absolutely, without burdening yourself, right? Financially and your family. In general, having real estate, I think, is a great tool, but I think it needs to be combined with a few various different things as well. I'll give you a really good scenario. So having a property, you can have access to like a HELOC. You can access to some debt that you could use that capital towards your business or expanding your business. And I've seen this working on a lot of different client files that are business owners. The first place that they'll reach out to, right, when they need capital right away without kind of diluting their ownership of shares, owning whatever the same amount, they'll access their HELOC. And a lot of equity could be accumulated over time through mortgage pay down and appreciation, and maybe through some forced appreciation if you did some renovations and stuff like that too. But these business owners, I found, they have almost like a huge advantage because now they can pull a ton of capital out, use it towards working capital in their business, look for if there's an opportunity. For example, I'm not advising this in the capital markets where they can see an opportunity where they're going to have access to capital that easily, where they don't have to go and like ask other people, right? So I realized having access to capital, that is really what one of the benefits of having the real estate is. So in summary, I think that it does help indirectly generate wealth because of all that access to capital. Now you can actually do what you need to do to facilitate other ways to get a more of like an ROI or increase your net worth. So it's almost like you need, like, no, you don't need a rental property or a principal residence, but it doesn't hurt to have if you can afford the payments and you have like the equity in there. So it's like, it's tough to sort of say, like, I haven't seen that many people that have built wealth without that. So
I don't know if you're familiar with Dave Ramsey.
Dave
Ramsey. So Dave Ramsey, I mean, obviously if you look at Canada versus the United States as a whole, and on average, obviously it's a lot more easier to. But obviously, Dave Ramsey recommends buying a house in cash and all that stuff, right? He just says they've surveyed X amount of millionaires, and majority of them own real estate, right? But like it's a small percentage of their portfolio, but they all own real estate. But it's different once you get up there, right?
So what I would say about this is, like, I don't think it ever hurts you. But what I do think is
if you can afford it.
If you can afford it, I think let's make it really simple. Let's put it like just, let's pretend if you could afford it. Let's pretend, let's go back in time, which we can't necessarily do it. Let's pretend if you could buy this home or this house and it didn't burden you at all. It was just a place for you to raise your family and to lay your head. No issues there. I think here's the thing though. It doesn't hurt because during tough economic times, right? The stock market is very volatile, right? And more likely to go down, like during like bad times. The thing is, your rental property or your home, you can't really sell it that easily. Like you can't just go and liquidate it right away. It takes quite a bit of time. Right?
So you wouldn't jump to sell it like you would sell a stock. Like you wouldn't make an emotional decision as easily, right?
That's number one. Number two is, it's pretty recessionary proof if you're using it as a rental. Meaning, like, obviously, your tenants can lose their jobs and stuff like that too. But for the most part, it's not that bad. Like it could help you withstand those tough economic times where, like maybe the prices or the prices have gone down. Maybe you can kind of like fight the storm for X amount more time that you need. Buy yourself more time until the market kind of rebounds. Use it as a rental. You don't have to upgrade homes right away. You can just stay there. It's still shelter at the end of the day for you. So it's multi-use, and I think that having it as part of your portfolio, and I mentioned this earlier, it cannot be the only way you build wealth, because there's another side to it. There's the liability side, leverage, right? So we often forget this, but when you buy a property, there's a mortgage, and that needs to be paid down.
That's still debt,
So you accumulate so much of this debt, it becomes a little bit of a hazy situation when things go bad. So I think that it needs to be combined with different sort of avenues as well. Even like insurance as well, right? Like you need insurance as well, right, to protect your assets. And also, you definitely could talk more about this, but like the life insurance and that kind of stuff. You need to kind of diversify, not too like the word diversify sounds like safe and protected because you're like, oh, I'm going to do all these different investments. But I think that you need to combine them in a way. Like talk to your accountant, your CPA of the tax implications. But there's an interest, right? Expense when you have, like when you pull from your HELOC, if you use it towards your business and all this other stuff. Like there's implications where, it's not just interest that's that's being accumulated, but you're using it towards something. So that benefit of using that capital towards your business or whatever it needs to help expand, the cost might, if your return is great, and you took the risk and you did that and you helped grow your business, the reward outweighs the risk or that interest expense a lot. So it's almost worth it to do. So what I would say is, like, you need to combine it with a few different things. You can't just bank on one, because when you put it, they say you put all your eggs in one basket.
Yeah.
It's the basket falls over, the eggs are all gone, right?
Yeah,
So
yeah.
you can't put them all in one basket.
Yeah, yeah.
But the
I've never heard that before. All the basket falls over, the eggs are all gone. That's really good.
Well,
it's a very good like analogy.
Well, it's true.
Like, yeah.
That's why they tell you not to put all your eggs in one basket, right?
Yeah, yeah.
Because it's true. Like, you definitely over diversifying is not good either.
Exactly.
Because then, your returns are going to be like
money. You're spread out too thin.
Yeah, you're spread. Like, you gain a lot here, you lose a lot here, and that's out to be very little too.
Yeah, yeah.
In terms of like avenues, right?
Yeah.
I think that you need there's a time and place for everything. Really, there's a time where it makes sense to put a lot of money into the stock market because. The time calls for it. But then there's also time for, for you to also, not buy as much real estate as well, right? So there's a time and place for everything. It's a conversation to be had, on a more personal and individual basis because it also talks about the risk and willingness for each person. Everyone has different risk tolerance level and affordability.
Yeah.
So it's not just a one size fits all. That's what I like about business and wealth building because it's so unique to each circumstance.
Yeah.
But there's principles that overarchingly we all relate to, right? Yeah. So it's definitely love to talk to you more about it over coffee another time. But it's a never ending, never ending for sure.
Yeah. If you were to start over again today, you didn't own real estate.
Yeah.
How much of your income would you want to allocate towards a house, a property that you're owning?
I would save as much as possible in general.
Yeah.
And whether when the time comes, let's say for example, we have 2 years to save X amount of money. Just pretend 50K.
Yeah.
Right? We have 2 years to save 50K. Once it hits 50K, I would, before it even hits 50K, I think about where should this capital be deployed into?
Yeah.
As opposed to forcing myself to buy real estate.
Yeah.
Because the problem,
where you get the most value for your money, right?
Exactly, right? You've heard the saying, rent where you live, invest elsewhere.
Yeah.
You've heard that sort of saying.
It's
not exactly quite like that. I'm paraphrasing it.
Yeah.
The idea is, I don't think it's the smartest thing to just be like, I want the tunnel vision.
Yeah.
And just be like, I'm going to do, and some people, it's not a knock on anybody because everyone.
It's a cultural thing to want to own property, right?
I
immigrant
totally
culture. It's like you have to own property, right?
I totally get it. I think in every culture, I think everybody can tangibly see real estate.
Yeah.
All right.
It's a symbol of wealth.
It's a symbol of stability too.
Whether you know, but the outside world doesn't know if you can afford it or not, right?
Yeah, I know what you're saying. It is a symbol.
Yeah.
It is a symbol of maturity, stability. It is sort of like the once you hit a certain age, you should have a house. I get it.
Yeah.
I think that what I would do if I had to start over, I would dedicate as much as possible.
Yeah.
But I also would focus on increasing income streams.
Yes.
Right? And if I was, to redo it, I don't care where the income comes from to an extent, right?
Yeah.
If I have to drive Uber, I do Uber. If I have to go take on an extra job, after my regular day job, and I would start more like a side hustle as well.
Yeah.
I know it's overextending yourself, but if your goal is to get as much capital as possible, then you got to do what you need to do.
Yeah.
Right? So that would be the first thing. So it has to be both ways. It has to be increasing the capital, reducing the debt, but increasing those savings as well.
Yeah.
So not having that lifestyle inflation, right? So I would think that that's the first thing I would do. Dedicate a percentage-wise. Yeah. No percentage really. Yeah. As much as possible, but keep like a minimum threshold. I'll always have, let's just say half, for example, which is a lot. Yeah. Which is a lot, but let's pretend half, and then it could never go less than half. And anything above that goes towards the emergency funds. Your question now is how much of your money should be going towards your living costs when you're trying to own something? I think it should be obviously be as low as possible. Exactly, so you can save and you have emergency fund. Right? That's the obvious answer. But what? Because I just find that a lot of people don't take that into consideration. They just want to, you know what I mean? They just buy the home to buy the home, right? What can we? If you live in the city, the big city, and you live anywhere, Toronto is not the only big city in the world. Yeah. There are London, New York, LA, Paris, Vancouver, Beijing, Shanghai, Hong Kong, right? There are so many places that are extremely, extremely expensive, right? Yeah. People live there. Yeah. You can't be like, I'm going to dedicate only 20% or less, 15. Well, if that's your answer, then you can't live there. well, you just have to make way more money.
Yeah,
and
exactly.
that might not be the quick and easy answer right away. You might be able to do it over a long period of time or like a middle period of time, but it's gradual, right? You're not going to be like, let's just say you're not going to be making like $1,000 and then all of a sudden like you're making like 15,000 like the next morning. It's going to take time. If you can get to 1,000, let's say you're making 1,000 a week to get to 15,000, we have to be also realistic. It might take like a while.
5 years.
Couple of years, for you to get there. Whether it's a promotion through a job, that's a great job to get promoted to right away if you're making 15,000 a week. But I'm saying if you're gonna get that jump, you have to be realistic in the fact that it is likely it will take a lot of time.
Yeah.
And if that's the case,
it might be a career change. You might have to make a whole career change.
It might be. It could be anything, right? It could be a career change. It could be starting your own business. Starting your own business, it might take a lot of time for it to ramp itself up to get to that stage.
Yeah.
So having said what I said is maybe the thought is you might have, kind of ties back to the previous conversation, you might have to move away to a place that's more affordable while trying to earn way more money. Yeah. Right? While suppressing those expenses, controlling them as well. I shouldn't say suppressing them, but controlling them as much as possible, lowering them as much as possible. That'll help you get to your end goal a lot faster, right? Yeah. And have a better quality of life as well, without the stress, without like a lot of these things, because the answer to your question really is as low as possible. Yeah. That's really the answer. But even on a multiple choice question, the answer is literally that. Like, you know what I mean? You choose the lowest number.
Yeah, you choose the lowest number,
Right? But in reality though, that really depends on your income and your spending habits. That's really what it comes down to. Yeah. And it's hard. It's hard to say
exactly a fixed number.
On a fixed number. Yeah.
What are your thoughts on people FOMO-ing into buying a house?
I think back in the day, there was a period of time people did that a lot, and people were able to profit off of it. And then obviously there was, like, I'm not a CPA, but I understand there was tax laws that were revised to accommodate for that. Yeah. And when I say accommodate, I mean like deter people. I mean away from doing that, right? To make it so it's not a profitable and as profitable, or it disincentivizes people to do it. So I understand that, right? The FOMO part. Yeah. I don't think FOMO-ing or fear of missing out for listeners out there is exclusive only to buying homes. Yeah. Think about sales at Costco. Think about sales that you see Black Friday, Boxing Day. Nobody wants to pay more. It's just a human nature thing.
Yeah. You buy what you don't. You end up buying what you don't need, right?
Yeah.
Because it's on sale and it's a great deal.
Right. So here's the thing: people are fearful of missing out on anything that kind of hits that human weakness, right?
Yeah, psychology at the end of the
day.
Right?
That human psychology. But where I want to really kind of dive into this is that what we do know for sure over the long period of time, not for sure, nothing life is for sure, but very likely prices will increase over the long period of time. Over the long run, if you kind of look at every study, every chart out there for home prices, as well as even in the stock market, it's gradually increased, even though there's been dips. So where you find a dip where prices are kind of like low, being like depreciated, there's going to be more demand for it because people don't want to pay more. Yeah. And my thoughts on the problem with the fear of missing out part is that's where there's a lot of people coming in to buy, which brings up the price.
Yeah. But then a lot of those people, they buy it without truly being able to afford, and then they end up like there's situations where I'm sure you know, like they lose their home. Because, you know what I mean? Because they bought what they couldn't afford and they over leveraged themselves, right?
I'll say this though, circumstances change. Yeah. I don't want to say people can't afford something. Affording and being able to qualify for something is a little bit different. Yeah. It's a different conversation. What you qualify for is based off of what a lender requirement is. Yeah. What you can afford, you can qualify for it, but you might be able to afford it, like actually afford it. Yeah. But then what happens if we haven't considered emergencies, right? What happens if like now you have to pay like $20,000 for, I don't know, something that went roof got destroyed, you have to pay $20,000 for it. Yeah. What happens if you need to buy a brand new car now? Yeah. Right? The circumstances, what happens if you lose your job? Yeah. So circumstances do change. Yeah. And when, let's say for example, a lot of your living expense is made up of housing, that's where it's like a little bit, goodness gracious. During a 30-year amortization, 30 years is a long time.
Yeah.
You know how many days passed in each of those 30 years?
Yeah.
A lot of days. So we're almost hoping that nothing will go wrong over those 30 years.
Yeah.
It's things will go wrong.
Yeah.
Right? And sacrifices will need to be made. Like if you had an emergency where you had to, dig into your personal savings for a roofing, car, that kind of stuff, you might not be able to go on vacation next year, which is okay. Like it's part of life, it's fine.
Yeah.
But
depends on what's more important to you, right?
Well, some things are non-negotiable. I think a roof leak is pretty non-negotiable. I don't think it's.
But so now you might have to go into debt because you might not have the adequate savings.
During our time and our conversation together, I haven't said at all it's easy. A lot of it is tough. It requires a lot of mental bandwidth, a lot of sacrifice, and a lot of regulation of emotions. So fear of missing out. I think that what it really comes down to is that we really need to understand our own financial circumstances, know our ability, and know our willingness too. Because you might have a lot of money that you'll be able to deploy in there, but what's your willingness though? Because you might be more comfortable renting and then using your money towards investing in other things, starting your own business, right? What's to say starting your own business and then growing it, you won't be able to buy your dream home later down the line. Maybe more expensive, but now you can actually afford it more comfortably.
Exactly.
Right? Or maybe doing a career change and studying for your master's, and then landing a very niche, great career job that pays a ton more money. What's to say, why is it such a linear path? We have to do this or we have to do that.
Yeah.
I think
everything's fluid.
Everything is fluid.
Yeah.
But we gotta kind of remove ourselves away from that fear of missing out part.
Yeah.
Because we have no control over our emotion, and we're afraid, and we're upset, sad, scared, happy. Those emotions will cause us to make bad decisions that will impact us later down the line.
Yeah. If you had to pick one single piece of information that has had the biggest impact on your finances, what would it be?
One of the biggest things that has helped for me personally is not reading news in the marketplace and overreacting to information that it's just a headline. Yeah. Right? When we invest in either real estate, when we invest in the stock market, and even in our own businesses, we're playing the long game. Yeah. There is nothing in the news, the headline news, that should impact your decision making day to day. Yeah. And what do I mean by that? I remember during Liberation Day when the whole thing about the tariffs. Yeah. Right? How everything just sort of went down in the capital markets, caused a lot of stress. Yeah. They always say that we know the rules of the game, which is to buy low, sell high. But people don't follow those rules. They sell, they buy high, sell low. Yeah. Right? And I can
act with their emotions. It's hard.
It's hard. It's hard. It's hard.
Easier said than done.
Right. It's definitely
especially
really
if you're new to it.
Especially if you're new to it, right? Right. But why does that happen? Because we see the stock market dipping. Yeah. Right? And we get nervous. Yeah. We don't want to lose more money.
You don't want to lose all your money.
I think just kind of holistically. Yeah. You don't want to see you lose all your money. Yeah. It's a crappy feeling. Yeah. But sometimes the whole thing about the fear of missing out, we buy something overpriced. Yeah. It's okay if we have a long-term window and horizon. Yeah. Because we know that overpriced will be self-corrected over time if these prices gradually go up over time. Yeah. Because that new all-time high may not be it might be very low compared to what the new all-time high will be later down the line. Yeah. Just like home prices. Yeah. Let's talk about that. I actually researched recently because I had a conversation with a client of mine and a friend, another friend, two separate people. Yeah. Home prices on average, and you can Google this up and on Gemini, on ChatGPT, it was $430,000 approximately on average for purchasing a home in Toronto in 2008 or 2009. Yeah. Or even 2010, between those years. Yeah. At that time, people must have thought, on average, they're like, oh, it's pretty high. Yeah. It's very high compared to before. Yeah. But now that $430,000 looks very cheap compared to an average home, which is about $1 million. Yeah. If you have a short window, that's where it really hurts you. Just like anything, if you work out and you're sore, and you say, "I'm sore, I don't like this feeling, I'm going to stop doing it now." Yeah. Right? You don't have the long-term horizon to know that soreness. Yeah. That's actually not even that bad. You won't be as sore in 4 years, 5 years from now, and you'll have better health.
Yeah.
Forget about looks. You'll just have better health.
Yeah. You'll feel better.
You'll feel better.
Yeah.
And you'll have better, like, sort of like everything. Like, everything is, you know, you do one thing right, most things kind of fall into place.
Yeah.
Right? So the long game is where you want to really, really stay locked in and focused.
Yeah.
So that's kind of my, like, thought about all this.
Yeah.
We can't. Also,
the news exists to get clicks and views, right? Like, so it's always going to be some sort of a fear mongering type of headline. Like, a positive headline doesn't really get as many eyeballs, right?
Yeah.
You know what I mean? So it's like, even if things are not that bad, the news will make it seem way worse than it is, right?
What I do these days is when I look at the news, I think it doesn't matter who it is.
Yeah.
You still get a little bit of a jolt from reading the news. Like, you get a little bit of this sort of like, but you have to, it serves as a friendly reminder. So you, in your non-primal mind, just remind yourself what you're reading and what it sort of like means.
Yeah.
And I always use it as a reminder for myself. Like, the headline news says the world is going to end.
Yeah.
AI bubble is going to pop anytime soon.
Google search is dead.
Anything like that, right? It's like the countdown starts now.
Yeah.
The world is about to end.
Yeah.
And then you think about it to yourself and you remind yourself, how many times have you seen this before?
Yeah.
And has it already ended before? Like, what did that last time? Because we have short memories. Like, what did the last time look like?
Yeah.
Right? I think I just use it as a self-reminder of like, I'm doing the right thing, or what do I need to do to kind of control this emotion?
Yeah.
That's been the biggest, like, my biggest, like, life, sort of like one of my biggest life lessons takeaway for personal finances and for business in general. Reading a headline and just knowing that it is only a headline.
Yeah, that's a really good one. I've never heard that answer yet.
That's
a really good one.
I had to learn it the hard way because I remember during COVID, the first time, when I say the first time.
March 2020.
I panic sold.
Yeah.
I'll tell you right now, I thought the world was going to end. I watched so many zombie movies in my life that I thought the world was literally going to end.
I thought when that was going on, I thought if I go outside, I was going to explode or something. Like, hey, because of how much the news was like, you know?
But the thing is, though, we haven't lived through many of these sort of situations to know maybe it's really bad, yes, but the markets in itself will, both real estate and, stock market, they will sort of like correct itself over time, right? And then there's going to be corrections. There's going to be like, new, highs. But if you just started, like we talked about inexperience, at that time, I don't think I lived through many, like 2008 was a really bad time as well, but I was like a lot younger. I was in high school at that time. So it didn't have the same significance. It didn't impact me at the same level. I didn't have to like pay bills. So the way I see it is like the more of these cycles you hit, the more you realize you have a little bit more like experience. It's like job resume experience. It's like you have things to fall back on. You know what I mean? So you kind of remember, but if you don't do anything, you won't remember. So I think and that's where the headline stuff is. Down the line, you'll remember the headlines from the COVID. You'll remember the headlines from AI bubble burst, tariffs, this and that. It helps kind of like propel you into the future.
Do you have a budget?
Yeah, it's a good question. I have a budget.
Like, when did you implement a budget in your life for the first time? Like, did you always have one?
I had a mental one.
Yeah.
The mental one seemed to work pretty well.
Yeah.
But I also know that having a real Excel version one is probably better.
Yeah.
Peace
of mind.
But you know what though? One thing I say is have one, but don't beat yourself up over it. Because you know what ends up happening, right? People, I could only use $400 for this per month.
Yeah.
You go over, you start, I'm not following my budget.
Yeah.
What I really think we should do is have a budget, understand why you chose that amount. Like, why are you using $400?
You might have to adjust it, right?
You might have to adjust it. You have to be realistic too for emergencies. And if all else goes wrong, you really need to increase the amount of income.
Yeah.
I think increasing the amount of income is really what solves a lot of the budgetary problems.
Exactly, I agree.
Because here's the thing. Let's say, for example, you're like, I want to use $400 a month for eating out, which is $100 a week, right? Is that realistic? Well, here's the thing. It requires a lot of lifestyle changes. Let's say, for example, you eat out $100 each week. What is it really? Is it one meal that's $100? Or a date night that's $100, or is it like lunch every day that adds up to $100 a week? is that something that we need or don't need? I'm not saying, because I do eat out sometimes a little more than I should, but I'm just saying what I think is it's about lifestyle changes. I have a really good example. So my wife and I, we signed up for a gym membership in the summer. Okay, remember this though. This is a pretty good thing to remind ourselves of. We can't be at two places at the same time.
Yeah.
So if you're at the gym, you can't be at like a restaurant.
Yeah.
If you're at the gym, you can't be like watching a movie. So you could only, like, if you have 24 hours in a day, then if you're spending time doing like productive things, for example, going to the gym, reading books, there's a lot of free and cheap entertainment. When I say cheaper forms of it sounds bad, you can read a book and really have a good time. You can really sit with somebody that means a lot in your life and enjoy a conversation with them.
Yeah.
You can spend a lot of time with your siblings and your parents and your grandparents and your family members without breaking the bank.
Yeah.
There's a lot of moments in life where we don't need to spend that much money.
Yeah.
Right?
Yeah.
And I understand, like, I love spending time with my wife, and I love going, because she's a big food person. You know, she's a big food person. She made me become a big food person. There's certain things in life that we can't put a price tag on.
Yeah.
All right.
The time spent.
Time spent with your loved ones.
Yeah.
The memories you make with your spouse. There's nothing like that. So if you know that there's a price tag that, you know, like there's a not price tag on it, and then there's actually the going to the movie part, and there's other things. Yes, maybe that could be, you know, lowered, right? Maybe we don't have to go like to CN Tower for dinner. Maybe we can go to a food court. It's okay. Yeah. Like, you know what I mean? Where I really think people really, it's not the discipline part, it's the feeling bad part about going over budget.
Yeah.
We have to reallocate, reshift. I think the best thing, my best advice for anybody is using 1 year to sample out what your budget should be.
Yeah.
And then the next year, companies do that.
Yeah.
They have like financial statements and stuff, and they use that information to make decisions.
Yeah.
Right? You need to use the 1 year to kind of decide, because you have 4 seasons now, seasonality now.
Yeah.
You know after that 1 year what we can adjust, what we can't adjust.
Yeah.
Right?
Yeah.
But I do have one. Do I follow it? It's difficult to follow all the time.
Yeah.
But what I think that's been helpful is, as you make more money, you're gonna spend more money on your health. Mm-hmm. You can't just spend the same amount. You have to spend more money on your health now. But the rate of this one increasing, which is the income, and the rate of the expenses, it has to be more like this.
Yeah.
Right? It can't be like together.
Exactly.
That's just the thing.
That's lifestyle creep, right? Yeah.
Yeah.
What would you say is your biggest money mistake?
My biggest money mistake is, I know for sure it's about emotions. It's not having the experience and then falling into like these emotional traps, right? And I'll give you guys a really good example. Just that the COVID example in 2020 March, I panicked sold.
Yeah.
Right. I had in my mind at that time, I saw so many like zombie movies, so many apocalypse type of movies. Yeah. And those things would just run in my mind. Like I thought the world was really gonna end. Yeah. Right. And having said that, I just panic sold. Which what really should have happened was I should have bought way more. Yeah. But I didn't.
Time to build wealth. Yeah. But you had to be so confident to know that it's not the end of the world to do that. Right?
Yeah. But you only know that.
You know that after. You might find out after the fact. But
yeah.
You know what I mean?
And what I sort of realized was that was a big mistake, because not only did I lose money, but I also lost the opportunity to make
build
money.
More. Yeah.
So I kind of made a commitment after that, and try to really regulate emotionally when I'm in a business setting. Maybe I feel like crushed in a situation in any business setting at that time, but I need to be able to kind of use self-talk to kind of walk myself off the ledge when it comes to feeling bad, especially because sometimes you make a bad decision. Yeah. Well, like when we look at an outcome, the outcome was not what we expected. Yeah. Based on the decision we made. But we reflect on it and we think, this is where the self-talk is important. Could I have done something better in that circumstance? If yes, well, clearly that didn't happen. So why, right? I think a lot of it just really comes down to experience in life. Yeah. and the bigger sample size. You know how like AI?
Yeah.
AI self-teaches itself.
Yeah.
It's able to even spelling errors and stuff. And you know what's the recommended words when you type?
Yeah.
It recommends.
Yeah.
The more you do, the more you're able to kind of be able to make better recommendations for yourself.
Exactly.
But you need to be conscious about it.
Yeah.
And not hurt yourself. When I say hurt yourself, is beat yourself up for making mistakes.
Yeah.
Make a lot of mistakes, make them quickly, and then rectify them. Being less attached to feeling bad about yourself, especially when you make mistakes. That's like my biggest losses were just because not knowing, not understanding.
Yeah.
And then being overly emotional about it, right?
But that turned out to be like a real blessing for you to actually experience that, and now you don't make that mistake again. You know what I mean? Or if you do, maybe it's on a smaller scale, and you don't, you know what I mean? You understand what's happening.
The financial impact of it is significantly less later down the line.
Exactly.
So and it ties into with starting things early, doing things early and often.
You could have also been like, okay, well now I'm never gonna enter the market ever again, because a lot of people that kind of stuff is trauma, right? They don't like really see it, right? Because they beat themselves up too much, right?
I also kind of figured this thing out.
Yeah.
We have very short memories of things.
Yeah.
Good and bad.
Yeah.
We're never truly happy as humans with things that we have.
Yeah.
Like we don't sit down and realize and have gratitude over things.
Yeah.
And then the bad things we also forget about too. The bad things
over time though, we fixate on the bad. Like it's easier to fixate on the bad, but then over time you forget the bad.
You forget about it too over time.
Yeah.
So if that's true, and we know that to be true, that means that like there will be also good times to replace those bad times.
Exactly.
So it's like
otherwise you would still be always thinking about the bad thing.
Or you still be going through the same bad thing.
Exactly.
So just kind of like those win-losses.
Yeah.
Every day is a battle of collecting wins and losses. Like just kind of like as long as you have more wins and losses, it's kind of like good. It's like everything in life. So just knowing that, I think just that's like kind of like my biggest was a takeaway or a mistake, money mistake loss. Yeah, lost money, lost time.
Yeah.
And lost the opportunity to make more money.
Yeah.
But now it's different. Now I'm using that sort of situation to remind myself of that. Yeah. So it doesn't happen quite the same.
Yeah, because you were able to apply that experience to the Liberation Day.
Right? Liberation Day, and then like other moments.
Other moments.
Well, where there's been
as long as Trump is president, there will be lots of moments like
there will be a lot of moments, and even when he's not, there's going to be moments like that too, right?
Yeah.
It's just the way it is, It's just the way it is.
Yeah. Okay, what would you say is your biggest money win?
See, here's the thing. I want to say, like, wholeheartedly, I don't have a biggest money win. I've had a lot of little wins that have accumulated over time, right? Yeah. Whether that was closing my first client and making them really happy, getting my first client review, making like a positive quarter, like on a first positive quarter return, whether that's my tenants paying me rent over a period of time, and let's say like they didn't pay or something like that, I worked something out with them so they were able to pay. Yeah. I don't have one. I have many little ones that add up to like a regular season of wins and losses. I can't say that because one win or biggest money win to me would be like building up a big business, selling it, and then that's like walking away from that. That to me is like when you ask me a question like that, that to me is something in my mind. Yeah. But will that day come or not? That doesn't matter to me. But each day chipping away at getting little wins and making sure those losses, those losses I'm about to lose, they become ties or like just barely squeaking out a win, or maybe a losing but a small loss. That to me is way more important because if we're gonna like look at a win and use that as a trophy for success, because we're kind of using an outcome to identify with that outcome as being a success or a failure. Let me tell you this: the movie has not ended yet. We still have to live every single day till the last day of our life.
Yeah.
So how do we not know, right? How do we not know that win was actually not a win?
Yeah.
Right, because it hasn't ended yet.
Yeah.
So
it's like a baseball game. Like the game's not over after the second inning, even if it's 10-0, right?
No, even though you're like, oh, I hit a grand slam in the second inning.
Yeah.
Then
you can still lose.
You can still lose. So I can't say that was my biggest money win.
Yeah.
I would
it's
say
like even like the Raptors, like a recent game, like LaMelo Ball hit a layup and like they were up and quickly hit the three, but LaMelo Ball was celebrating like they won the game because there was like a couple seconds left, and then they lost. Right.
But what I would say about this is solving problems for my clients, tenants, for my friends and family as well. Solving problems for them helps with what I say, solving problems, giving them good advice, caring for people. I think those help to add to my biggest, or not biggest, but many little money wins.
Yeah.
Why? Because I'm able to actually solve problems, stretch that muscle, use that muscle, problem-solving muscle.
Yeah.
You know, I think that's really important. So if I can't say one thing, I'll use a really good example. We go back, panic selling during COVID, right? And then since then, have I learned from that? Yes. So that's
the win right there.
That's the win
that's
right there.
Big money win right
there. My tenant going through a really tough time, like right, and me having to work with them on like a smaller digestible payment plan when they were going through a hard time. Yeah. That was a win for them.
That's a win, yeah.
Because, and for me,
your relationship
is not strained. Right? And then, you know, I have a friend, business partner. You know, he needs me to do my part, and then we're able to achieve a great, better outcome. You know, as a result of it. Like I have a lot of great business. I have a lot of great business partners.
Yeah.
And we do a lot of different business together, whether it's development, whether it's real estate, whether it's other types of businesses, whether it's the mortgage.
Yeah.
Maintaining and developing and strengthening those ties and being able to, I care for them.
Yeah.
I make sure they win. I make sure I do what's best interest for them. Those contributes to our wins.
Yeah.
Our wins collectively as well.
Yeah.
There's a lot of losses too, right, along the way, because you can't go through all of it without getting losses along the way.
Yeah.
But to say there's like a Larry O'Brien, a Stanley Cup biggest win, there isn't just one. There's so many that have accumulated over time.
Great answer. What percentage, do you have like a percentage of your income that you aim to save every month?
Yeah, I try to save all of it, really.
Yeah.
I try to save all of it. I don't have a percentage. Some months I'll save so much because I don't do anything for like 4 months.
Yeah.
Right? Some months I save as much as I can because I just don't go anywhere. I don't do anything. Then some months I have to overspend because, you know, I have like family, relatives that are visiting from overseas. Yeah. You know what I mean? Like you can't count and you can't accommodate for everything. Yeah. So what I would say is like
the months that you have to overspend because you save so aggressively, it doesn't hit you as hard.
It doesn't hit as hard. So what I would say is I do have, like we talked about the budget thing. I have like an Excel in mind, a template in mind, but I don't beat myself up about it. I always have to, the internal dialogue. You got to remind yourself why is so important. Explaining why. If you can explain to yourself why, and you can explain to somebody else why, you don't need to explain to somebody else. If you have to hypothetically. And it makes sense, and you don't feel like it's a stupid answer, and it makes sense to you, it's a good enough reason. It's not that bad. Yeah. So what I would say about that is I try and save as much as I can because saving is super underrated. There's nothing sexy about it. Like if you people are looking for this financial advice, like what should I invest in? What should I buy? What type of business should I start? Where should I move to?
It starts with saving. Everything starts with saving first. You have to save a lot.
Everything starts with saving, right? Because if you can't save money, you can't run a company well. Yeah. Right? Yeah. And I think that I also realize this too. Saving is saving, but there's a qualitative side and a quantitative side. We can't just look at saving as in, I'm going to save every dollar. You also sometimes got to look at quality too. Yeah. Because let's say you save, let's say you're like, I'm going to try and lower my budget to this amount. Like let's say I want to lower meals and entertainment, you know, to 400 down to 300. Yeah. Okay, you could do that. But I'm not going to buy more hot dogs, right? It's cheaper eating more hot dogs than eating maybe a steak. Yeah. but it's not better quality. So it does. You have to pay somewhere else. You're paying $100 less.
Sacrifice somewhere else.
You gotta sacrifice somewhere else now.
Yeah.
So what I've kind of realized is like it's not just about the dollar amount, but it's about also what you pay, how much more you're getting for what you're paying.
Yeah.
So I realized that, and I have to be more disciplined. It's not just going cheap everything, because cheap and lower cost, lower prices do have a price tag as well.
Yeah.
Which we can't see.
Yeah.
Visually, which is the qualitative part.
The money that you save, is there a portion of that you invest? Do you just kind of keep the savings, and when an opportunity arises, then you kind of deploy it?
Yeah, more of that.
Yeah.
I don't think that we should force ourselves. I know
like dollar cost averaging or
dollar cost averaging. Yeah, I think I really believe in dollar cost averaging.
Yeah.
But I believe in dollar cost averaging at certain times.
Yeah.
Like more, you might buy more at a certain time than others. I believe that in more. So I think that what I've been able to do, and I'm proud of this, was that there was a point in time where I was very cash like poor.
Yeah.
Just because I had capital tied in with everything else.
Yeah.
I didn't have like an emergency fund, like a real emergency fund.
Yeah, that's another question, but yeah, I'll get to that. Yeah.
So I didn't have one. So I would always feel anxious now because I don't want to pull money out of this or that. So what I ended up realizing, and I had to have this sort of like moment to reflect, is this a good time to like be investing?
Yeah.
Like, is this a good time, or is this not a good time? Is there a better time? Maybe the better time, like, you know what I mean? Like, or have I done enough previously? Like, where are we at right now? If something bad goes on right now, where am I going to pull this? Like, if I have to go buy a new car, where do I get the down payment from?
Yeah.
So that's when I sort of realized, I'm like, there is a point where you are in a safe zone.
Yeah.
Then you gotta, it's like attention. It's like, okay, there's a time and place to go all in for investing. And then there's a time to go all in for like saving for your emergency fund as well. And I'll be honest with you, I am proud of myself being able to build up an emergency fund, because there was a time where I had nothing in my emergency fund, which I used the emergency fund to invest at that time. So as I talk about it now, it's like funny, but at the time it's not. It's like stressful, because I'm like, something happens. Let's say my parents needed help with something.
Yeah.
Let's say,
That's why Dave Ramsey says you have the emergency fund first before you invest, but it's not that obvious. It's not sexy, right? To put the emergency fund in first and like have like a large reserve.
Yeah.
Where you have that FOMO, the FOMO kicks in.
FOMO kicks
right?
in.
Everyone is in this like stock or whatever.
Or you know what it is too? It's like not just the fear of the fear of missing out for sure.
Yeah.
But the fear of opportunity cost, missing out on those returns.
Yeah, exactly.
Or the thought of potentially making those returns. Not guaranteed. No guarantee.
Yeah, there's no guarantee. Yeah, your cash savings is a guarantee. The amount of money you're putting away into your thing, that's a guarantee, and whatever interest you earn on it, that's a guarantee.
Hey, bad things in life could always happen.
Yeah.
So that's why I think that we need to be prepared for them as well. So that's why I'm like the most proud that I've been able to kind of save up the last like a little bit, like a couple months, a few months here and there, just to like be at a spot where I'm like, if something was to happen, I'm happy to know at least I can buy myself a little bit more time.
Yeah. So how much, how many months of an emergency fund do you keep?
Right now, I think that I'm pretty happy at 6 right now.
6, yeah.
Like 6 is like, never had 6 before. I never even had 3 before.
Yeah. So even 3 is a big deal.
I think I'm at 6 right now, so I'm happy at 6.
Yeah.
In case anything was to happen, for example, you got to scare yourself a little bit sometimes.
Yeah.
Fear will make you do some certain things.
Yeah.
You know what I mean? If you were scared of something, you will act the way you need to act.
Yeah.
If you're that scared of not having an emergency fund, you will do anything in your power to make sure you have enough in an emergency fund to feel good.
Yeah.
So sometimes you gotta kick yourself in the butt a little bit. Don't make yourself feel bad, but you gotta scare yourself into doing certain things.
Yeah.
You know what I mean?
Yeah.
If you don't if you're not scared of anything, you don't need to do anything. You know, if there's no consequence for not paying taxes, no one would pay. If there's no consequence for paying a credit card late, you wouldn't pay on time.
Exactly.
There is a consequence though. And you need to remind yourself of that just to push you in the right direction.
Yeah.
But don't paralyze yourself with the fear.
Yeah.
That's what I would say.
Yeah. What are your thoughts on the stock market, and do you invest in the stock market?
I really have a deep respect and appreciation for the capital markets, for the stock market. I heard this study. I don't know. Don't quote me if this is right or not, but they said that in Japan, I believe 13% of people invest in the U.S. stock market. 13%.
Yeah.
That's a very low number in my opinion. for a country that has that many people.
Yeah.
But then again, it's also because people are fighting for capital, right?
Yeah.
Like businesses are like in companies in Japan. Maybe most people are investing in Japanese companies as opposed to American companies. I have such a deep appreciation for the availability to have investment opportunities that are liquid.
Yeah.
Right? Liquid, there you can buy, you can transact on them on your phone. The information that is out there is all readily available at all times. It's just a matter of understanding what your sort of tolerance and what your ability is always.
And your time horizon.
What your time horizon is. But there is a tool. So I do have a deep appreciation for it. I invest in it because I know that so many people have built great wealth investing in the stock market, just like Warren Buffett, Charlie Munger,
Rest in peace.
Rest in peace, Charlie. There are so many successful people that invest in the capital markets. And also, think about the businesses that are involved in the capital market, how successful they are and how much money that they generate. And think about the companies that need to raise the capital.
Yeah.
Right? In the companies that are publicly traded, that are doing like the big ones like the Magnificent Seven.
Yeah.
Apple, Tesla, Microsoft. Like they're growing. They're very innovative. They have a lot of R&D.
Yeah.
Like it pushes our society forward.
Yeah.
So I know just from my sort of thoughts, real estate is great.
Yeah.
Real estate is a tool.
Yeah.
But real estate is not the stock market.
Yeah. Like these companies, like the Mag 7, for example, they have so much more capital available, and they know how to deploy the capital at a much better, efficient rate, and like much faster in innovation, more than like we can do on our own, right?
Absolutely.
So it's like, why would you not participate in that?
Exactly.
You know what I mean?
I think that, and remember, the stock market is forward-looking.
Yeah.
It looks into the future.
Yeah.
It looks into, and the future we do know is for sure always it's about speed. It's about new technologies, new ways of living the same life that we live. New ways of living the same life. How does that? It's like almost like not even a correct way to say it.
Yeah.
But the same way in which we live, a new way in which we can live a better life.
Yeah,
right?
Did you hear what Elon Musk said about the humanoid robots in the future?
What did he say?
He said that basically healthcare will be free in the future because the Tesla Optimus or whatever, the robot, would cost $20,000. And so essentially, people finance 20,000, way more expensive cars than 20,000.
Yeah.
And he said that it would be able to do surgery more precise than an actual surgeon can. So obviously, especially in the places like the United States where you have to have hospital bills and stuff, it solves the healthcare issue. You know what I mean? And that's crazy to think about that can be a reality. Obviously, we're very skeptical now, but we're also skeptical about self-driving cars.
This is the thing though. People, they have, hindsight's 20/20.
Yeah.
People always bash things before, they make it to market or become a part of our life and our society, right?
Yeah.
Before,
like Uber, for example,
Uber,
right? People imagine when Uber first started, people were like, "Yo, what is this?"
Internet,
right?
telephone, airplane. Let's go like any sort of piece of technology or innovation met its challenges with acceptance. A lot of it with cost. A lot of it obviously is like if it's never been seen before, like what is it? Like how does society take on this sort of new technology? Yeah. But what I would say about it is like you kind of touched on a really good point. There are people that are much more successful than we are, much more intelligent. We should ride their coattails a little bit, like kind of like follow the big elephant, the one that will like imagine there's a big elephant and you're that little chipmunk on its tail, and you get to go, or even you get to ride on this big elephant to wherever it's going. Yeah, it's so big. It could trample over anything. It could go to new places in the world. Yeah. But you're just a spectator following along that big elephant.
And you just have to have that awareness and understanding of what this could mean for you.
Yeah, right? Exactly, right? And I use the analogy of the elephant because my wife, she's the one that introduced me. It doesn't translate exactly well in English, but basically what it was like, if there's a big elephant, you'd rather be the little critter on the elephant than be nothing around that elephant. You want to benefit because an elephant is a very very powerful creature. It's a very powerful animal. Yeah. So what she was saying was
very smart.
And very smart, right? Yeah. So what she was saying was like, I'd rather be part of the elephant than not at all involved with that elephant. Getting the little piece of it is better than nothing. So the Mag 7, the big companies in America and in the world that have competent, smart, intelligent people running them,
Yeah.
let's ride their coattails. To answer your question, I do invest in the stock market.
When did you start? Like how old are you when you started?
I started
late.
I started late and early is like relative, because you tell someone you started late and then an old person down they're like,
I started at 50, right?
right? So it's relative. So I started really seriously doing it in like 2018.
Damn, yeah. To me, that's early.
To me, that's late, because in 2018 I was like I was 26. So I before that I didn't. I like did like paper, because I thought trading was investing. Right?
Yeah,
I thought so.
That's my biggest beef with it, like the terminologies, because like I'm on like Twitter and X a lot. That's where I get all my news and all that stuff. And it's just like, there's the traders are on Twitter, and then there's the investors that are on Twitter, and the traders will say that a very quality company is trash because of the setup, right? Because of the setup. But that company could have been Amazon 20 years ago. You know what I mean? Because the trader has a short-term mindset, because they're looking at what is the opportunity cost and what has the momentum today, versus the investor. They make their money on that one, the one that has the horrible setup today.
Like I knew that like this was a great tool, because I went to Laurier, I studied business, so we had courses about like finance and stuff like that. In our first year in school, this is before seriously even diving into like midterms or anything. Like in my first year, they had like a stock market challenge. So they wanted people, like, this is virtual. It's for marks too. If you're like in the top like whatever percent, you get like full marks. You get next percentile, you get like 8 out of 10, like, you know,
so this is like a finance course?
No, this is his business. Like,
just a business
course.
A
regular business course that had this portion of it.
Oh, wow.
So I awesome, knew, I'm like, hey, this is interesting. So before that, I when I was like younger, I looked at stock market was like some sophisticated thing where only like the brightest, smartest, like the most intelligent people could invest. But then successfully, because my dad invests, and I have family members that invest too. So I knew that like it's available to everybody. But I thought like to recharge, to do this, to do that. So I thought it was like this very highly sophisticated thing. But that was real investing. But then when I was introduced to that stock market thing in school, I was like, oh, this is like pretty cool. It's like what my dad does, or what my family, my relatives do. They're just buying stocks and holding them. And then what ended up happening was, after I started working, I started like saving money a little bit here and there. And then I was like, maybe if I save enough of it, I can use it to trade. Right? Because I thought that was investing. So I'd always save money to set myself up to the day that I could do that. So I was like learning and reading books and this and that, and then eventually I opened up my TFSA kind of late, like 2018, 2019.
2018, that's when I opened too,
That's when I opened it up. But I'm a little bit older than you too, so it is like kind of late for me. For me. So I opened it up and I started just like, I'm gonna be like, I'm just gonna buy like this stock, I'm gonna buy this, I'm gonna buy that. But I didn't really understand.
Like valuation and like the stock price, the present value of the future cash flow, right? Like I understood that I know now. I didn't know then. You know?
See, here's the thing. I understood those things from a theoretical point of view, but how to apply it in a real world setting, I didn't really understand. So that's where I realized, and I was like, okay, well, let's like read into this further and understand what it is. And the more I was reading and researching, understanding, it was just like procrastinating the investing part. So I started investing in 2018-19 in the TFSA. And that's when I started getting exposure. And mind you, a lot of losses. A lot. Like I mean, like
you have to go through it. I have to.
Things I held on to, which would never turn around. And then I just still held on to that.
You got to cut your losses. You learn. You have to cut your losses.
You learn, right?
When you invest, you have this like initially you have this mentality where you see green and you see red in your portfolio, and you're hesitant to add to the green because if you first bought it at $10 and now it's like $70, you're like, oh, wow, I bought it at 10, I just let it ride, but then. That could go up like 10 times more versus your loser. You would put money into your loser, which is could even go down further, right? It's like there's a lot of
and sometimes people don't want to realize the loss when they sell, because you know what I mean. So
like in the TFSA, you don't get anything. You actually lose in the TFSA versus like in a non-registered account, you have the tax loss harvesting and all that stuff, right?
So. Like, I can't remember the original question you were asking.
Do you invest in stock? What are your thoughts on the stock market? We can do a whole episode on just this.
I think what it comes down to is starting young.
Yeah.
And investing frequently.
Yeah.
Investing when you see the prices go down a little bit more. Yes, of course. Like it's if you believe in the stock and you believe in the ETF and you understand your reason. And you could explain it to yourself and you explain it to other people. That's what I've been taught. Like that it makes sense and you should invest in it.
Yeah.
But starting young though, I think starting young as soon as you can.
Yeah, 18. Yeah, we're so lucky to have like Wealth Simple. Like when I started, Wealth Simple didn't have the features it had today, so I was on TD Direct Investing.
Yeah.
And like $10 commission every buy, every sell, right? Crazy. Everything's free now. You have USD accounts. Like, it's crazy. It's come a long way.
It's just if it's only you don't do it, that's the problem.
Yeah.
You know what I mean? If you don't start, that's the problem.
It's just yeah.
But I really enjoy talking about like business in general, which encompasses the capital markets, investing in real estate, and business and like running a business, small business, and insurance too. Actually, it's funny that people don't talk about insurance, but I have a policy, my wife and I both, and we know that it's meant for critical illness, and it's also meant for as I don't want to say like a HELOC, but like there's cash value that's built up and you can access.
It's like a second retirement savings. Like it's like another form of savings or alternative investment where you can pull money from that you can borrow against, right?
Which we haven't talked about that at all, but I think that just having those sort of vehicles, and then having also investing into your health too. Like I don't think I've ever told you this, but I practice Brazilian Jiu-Jitsu. I try and train every day. It's become like a couple times a week right now, just due to like busyness. But I've been training.
How long have you been doing it?
I started in 2012.
Wow, that's a long time.
I started in 2012.
I used to do Taekwondo way back when I was.
I used to do Taekwondo way back too, before Jiu-Jitsu because I didn't know about Jiu-Jitsu.
Yeah.
So I invest in that a lot. I invested a lot of time. I invested a lot of money into training over the years, traveling, competing, and training at different places, and that's an investment. And what do I get out of that? I get a lot of personal growth. I get a lot of enjoyment of when you're like after a certain age, when you graduate and stuff. It's hard to continue athletic life. It's very hard. You're either going to be just in the gym lifting weights, or you're going to be doing some intramurals. And the thing about intramurals or like co-ed sports is fun. I love ball sports and like basketball, soccer, those kind of things too. But the problem is you need an entire squad to go with. Without that entire squad, you can't really play. And it's difficult, and you can do drop-ins. But the camaraderie you get from grappling and doing that stuff, I think is like I've met lifelong friends. I've like great people. Like my business partners, a lot of them have come from jiu-jitsu. So in my opinion, it's like I never did it intentionally for those things, but those were the fruits that came with it. So anything that's skill building, anything that makes you challenge yourself and make you really have to learn a skill and work towards mastery, which we never 100% become mastered anything, but working and growing over time, I think is a really great investment. So I look at investing as not just about capital, even spiritual too. You have to kind of look for ways to places
invest in yourself.
Invest in yourself, so you become a better person, and when you become a better person and a better version of yourself, you're a better contributing member to society, right? You're not like a person people don't want to be around. You want to be a happy magnet that could draw and attract happy people into your life too, and make their life better too.
Make an impact.
So
tell us a little bit about your real estate investing journey and what you've learned since you started. Like, when did you start?
So I started in 2022. That's when I closed on my first property. And then
where was it?
So that property is in Sudbury. I started researching about real estate in like May of 2021. I was blessed. I had a really good friend of mine. Him and his wife were investing in real estate, and every time I met them, they seemed to have a new property, right? And I just didn't understand, and I'm like, just didn't really think too much about it. They were all really far away from the GTA, so I didn't really think too much about it. But May 2021 was when it really sort of hit me, because we had met up, we spoke, And then they kind of like my friend told me about what he was doing, and I was like, me and my wife were really like, oh, this is really interesting stuff. Why can't we?
Yeah.
Why don't we get involved somehow for ourselves? And I was lucky because my really good friend, him and his wife would meet with us for coffees and do stuff online together to kind of educate and teach us about what they were doing and see if there was something that we could learn from that so we could do it for ourselves. So I bought my first property in Sudbury and closed on it 2022. And what I learned really from that experience was like, you really learn to mature quickly because you have to become really responsible.
Yeah.
Responsible for maintaining the property, responsible for the people who are renting your property, and responsible when I started scaling up and doing building.
Yeah.
Responsible for investor capital.
Yeah.
For your investors too.
Yeah.
So you're responsible for a lot of other stakeholders.
Yeah.
So my journey started there, and then the subsequent projects that I've done, they're all joint ventured with other partners and close friends of mine. I like to do business with my friends and my family.
Yeah.
The properties after, they became bigger projects. Slowly, like one was a big renovation gut job. The second one, the subsequent ones after that was more like conversions into more densification.
Yeah.
And then eventually got into the U.S.
I was going to ask about that. Yeah, you were talking about it when we met and stuff. How did you get into, like, how was the process versus like investing locally versus in the U.S.? Was there major was there hurdles you had to get over to?
Yeah, so I would say because I had some experience doing it here in Canada, the experience transfers really well because experience is experience, right?
Yeah.
I know how to manage properties from far. I know how to deal with construction projects. Know how to deal with like different contractors, suppliers, different stuff in a way where it's not overly time consuming.
Yeah, you're getting good value for your time.
Yeah, like doing it and having the right partnerships with the right people.
Yeah.
Meeting expectations, exceeding expectations, and when expectations are not being met, communicating with them early, like just being a well-rounded, more responsible person. So just going to the U.S., the challenges that I had was just unfamiliarity with the laws of taxes and corporate structure, this and that.
Yeah.
But otherwise, it's
set up an LLC there.
Something like that, right? So I'm not a CPA, I'm not a lawyer.
Yeah.
Talk to your accountant, talk to your cross-border people and your lawyers. But essentially, that's the biggest thing I was unfamiliar with.
Yeah.
Why I went there, I really wanted to diversify my portfolio in a way because I saw there were a lot of different markets that were.
Yeah. Have you heard of this guy named Jim Chong?
Oh yeah.
You know what I'm talking about?
Yeah.
Of course. That guy, like, he's like all over social media.
Yeah, he's all over social media.
He bought during like the recession.
Bought in Arizona in 2008. Like he was buying like everything.
Because he's a Canadian person who bought a lot in the U.S., right?
I'll tell you this though. I really love investing in the U.S.
Yeah.
But I don't consider myself as a real estate investor. I'm just a guy that owns businesses that just happens to own rental properties and some properties. Like I don't consider myself as a real investor.
Yeah.
Like why I'm saying that is because I don't want to put it on a pedestal. Like I don't want to make this seem like a thing. Like anybody can do it. Anybody can do it. It's not like being a doctor where you have to get some specialized education for it or skills. Like anyone can do it. You can learn from your experience. You got to
put the time in, the hours to get proficient at it.
You do, just like anything, just like jujitsu, just like grade 12 math, like anything, right?
Yeah.
But I don't want people to think that only a special person can do it.
Yeah.
Only someone that's amazing can do it.
Yeah.
You learn from experience, you learn from trying, you learn from talking to other people, you learn from doing.
Yeah.
You learn from doing.
Yeah.
You don't learn from reading only. You don't learn from, just pretending.
Yeah.
You learn from doing.
Yeah.
So, and you get as somebody that invests in real estate and has rental properties, you get to be part-time or as full-time as you want to be, depending what you want to do. What do I mean by that? I love dealing with tenants.
Yeah.
I love talking to them. I love calling them. I love texting them. I love being communicative with them.
The interaction.
I love the interaction with them. So that's more of my wheelhouse, and I want to do that.
Yeah.
But let's say when it comes down to the construction management stuff, I have a business partner that I do that with. He's expert level when it comes to construction material, construction timelines, construction basically scope of work.
Yeah.
So he focuses more on that.
You guys have that synergy, like
we have synergy.
Yeah.
the real estate stuff in the US, it was because I wanted to like try it out, see what's there, see what it's like, what's similar about it here, then like what's similar to Canada, what's different from Canada. But my real estate journey of investing, where it sort of has come to today, is I started building a multifamily property, like an 8-unit building out in Alberta. I have a business partner, a very, very good business partner. Him and I are really good friends. We've become really good friends doing this stuff together. We've learned a lot from one another, and we've learned a lot doing things just from the experience. That was like a big, very, very big change. Why? Because there's a different type of construction loan that it comes out in draws as you build out the building to pay out the contractors and the builders. And then the second thing is I don't have to, like, we have a builder that does all of the stuff. So I'm not hiring out individual contractors to do certain things like plumbing, electrical, this. Like their entire team does everything. They did all the drawings, they did everything. So that's a huge step up from converting a basement unit into a separate unit, which I needed to do, by the way, to know how to be able to do something this much bigger. But kind of my journey sort of started off buying something very simple, turnkey, to basically doing one small thing up, one challenge up, another challenge up, one incremental gain, to now buying a lot, demolishing the existing infrastructure there, pouring a foundation there, building an 8-unit multifamily building there. That is much different than the first thing in 2022. Right? But I attribute that a lot to wanting to challenge myself. And also the second thing was knowing that there's something bigger and greater, and knowing that I could make a much greater impact by learning these skills, so I could pass them on to people in my friend circle, my network, my friends and family, people that want to learn about it. I can always share with them because I have been there, done that. Just like when you asked me earlier why I got into mortgages and what got me into it. Same thing, been there, done that. I can share that with you.
Got it.
So same thing, just that's my kind of way to give back. By going through the fires first, so you guys don't have to get burned. That's basically it.
Do you have a financial goal for yourself?
To be honest with you, I want to start a family. With my wife. I think we've done so much. This journey is, as much as it is mine, it's my wife's journey as well. We've done so much. We've been together since 2017. I think that the financial goal, it's always going to be there. Like I have dreams, goals, but I don't look at it like financial goals. Like I want to keep building out more buildings. I want to buy like interesting businesses that I'd love to run myself or run with a partner, or I want to keep growing my mortgage business, because my mortgage business I've seen impacts a lot of people in a positive way. And I want to keep meeting more people, but I want to also tie that into my family life. I want to start a family with my wife and know that there's not a work-life balance, but a work-life harmonization where it needs to become tailored with my businesses and with my goals and my own dreams. Otherwise, I don't like the work-life balance, because like a good friend of mine, he told me where he works, they don't use that term, because the word balance implies that it can go out of balance. Right? Like this teeter-totter thing. But what I want is more like this, like more this. And when he told me about that, where he worked, they don't use that term. I'm like, that is a very new way, or a kind of an innovative way to think about it. And I don't know if you ever heard of the word ikigai. Ikigai. That word,
Japanese.
It's a Japanese term, right? So finding true meaning,
like
your purpose, and like true meaning in your purpose, right? I've become a lot less financially driven. In terms of dollars and cents. I look at projects, and I look at people I could impact. I look at people's lives I could change more. When you've made money and lost money too, you realize like it doesn't really matter that much. Like money comes and goes.
You don't take your money with you.
You don't take your money with you. And when I was very poor, I was also happy. And when I started being a little bit more competent, like, financially, I was also very happy. There were moments in both spectrums of my life where I was not happy too, but I've been happy in both settings. So I realized it's never been really about money. It's about purpose, and it's about relationships, and it's always about yesterday before we met. we had a small get together because next weekend I'm going to be away, for a family trip.
Yeah.
And then our really close family friends, they are going to go back to the home country to celebrate the Lunar New Year.
Yeah.
They're going to be there a little while.
Yeah.
So we celebrate the last few Lunar New Years together.
Yeah.
And because we're not celebrating this year together, we're kind of celebrating it a little bit early. And I sat in that room. We were just playing board games.
Yeah.
And I mean, there was a time in my life where like board games, that's not cool, whatever, right?
Yeah.
But then I'm playing board games. I see a little baby there, our friend's baby.
Yeah.
And I see everybody smiling and laughing together. And that's not the reason why I want to start a family, by the way. We were already like planning and thinking about it ahead of time. But I see this is something in my memory that could take with me, and it made me feel very warm, and it made me feel a lot of love, and the group together felt a lot of warmth and love too. I mean, like, that's what it's really about. And I think it takes you a long time to get to that stage where you realize that's important.
Yeah.
Like money, is it that important? Yes, it gives you a lot of freedoms and choices.
Yeah.
In life.
Yeah.
But there's also like, you can never do it out of greed, and you can never do it at the expense of somebody else. To be honest with you, I could make more money, and I realized that in doing so, it's not like I don't want to make more money.
Yeah.
It's I don't ever want to do it at somebody else's expense.
Yeah.
So I will rather make less money and be happy than make way more money than hurt somebody at the end of the day.
I agree.
Right?
Yeah.
It's life, and
yeah.
So my financial goal really is, because I want to start a family, I got to make sure our son or daughter that we introduce into the world has parents that are present. I want to be able to have dedicated time slots to do certain things.
Yeah.
Like, right? And I want also them, I know this is a huge stretch, but I want them to see their parents live a life where they can emulate and try to have as well for themselves, or like they look at their parents and they're like, I learned something from this, and I really want to pursue my own dreams and aspirations. Whether it's the same thing or not, it's a totally different thing. But I want to be a good role model to everybody, not just my future son or daughter. I want to be a good role model for other people. So the financial thing is just like, I think that people look up to people that, unfortunately, people look up to people that have results. Yeah. Right. And I think that what it comes down to is, the results are just the kind of the trophies and the medals from like the success, right? Yeah. Which to me is not entirely, it should not be tied around your identity. But unfortunately, that's how people like, are you going to listen to somebody with like 800,000 followers, or are you going to listen to somebody with like 4 or 5 or 10, 15, 20, right? It's just like people look at success and quantify it. Yeah. For me, I stopped quantifying success. Yeah. At all, completely. I know I will be happy if I just keep doing what I'm doing ethically. And I know we've kind of rambled on and gone really, really far off the deep end when it comes to this. But I think I've come to that realization, because I know that, let's say I was to screw it all up and I redid it again, I would redo it again. And I would take all my life experiences and hopefully replicate the same or better success. Yeah. So I'm not worried about that. I think it's like kind of when you're worried that you can't do it again. Yeah. I think I'm living every day just to know that like I can do this. I could also have my wife part of the journey, which she's happy to be part of the journey. Yeah. She bails me out of a lot of problems. So I think advice for all young men out there: find a great wife that you could love and grow old with. Yeah. Know that there's going to be like there's moments it's not perfect. Everything in life, but like when you find that like the right person. Yeah. Your dreams and your goals, everything is like, it's like much easier. Makes it easier, yeah. Much easier. 100%. Young men and women out there, you guys have to get married and find people that you love, and because you're not only married, you're married to their families. Yeah. So that's another new group of people that you they become part of you. They become a part of your identity as well. You're not only wearing the flag of your own family, but the family of your wife or your husband, right? So I really appreciate your time.
Like having conversations like this, it's so important. Like especially like for living on like online, because it can make such a big impact on other people, and everybody has like a completely different story and a different viewpoint on the world. So it's like, it was very enlightening hearing yours.
No, I really appreciate your time. You came all this way to see me. And I will say this though, if we talked to one another like maybe like a couple of years, like maybe even like at the start of my journey, I would like the story would have been different. And not only that, the perspective would have been different. I think that just going through all of this, realizing like I know for sure like it's nothing is finite. Nothing is forever. Everything is temporary. We're leasing this life. This life is just it's a lease. Like we have it up until a certain point in time, then we have to give it back. Knowing that, we got to be selfless, not selfish. We got to be selfless. And people that know me, and I'm proud to say this, they will tell you like, for me, like I live for the other person, which honestly is not the most profitable way. But I live for the other person, and because I live for other people, I don't do it like. I don't put myself first, and that is also a problem. I got to work on that. But
I can relate to you a lot. I think that's why like we like that.
I can relate because
that's
a lot
the
of
problem
people.
I have to,
A lot of people. It's hard for me to say this for sure, but that's why when you said you were going to come, I really appreciate it because it's time out of your day.
I appreciate your time too.
No, I really appreciate. We'll have more conversations. And